The third industrial revolution.
So, how can we speed up the process of the third industrial revolution? Well, we need to use the old model to give birth to the new. So let's have a look at how industrial revolutions have been funded historically and how we can fund the new model. When we look historically, we can see that previously we had a system of kings and queens. We had a monarchy that owned most of the treasure, most of the gold, most of the resources, and then they distributed to their people. However, with fossil fuels, no monarchy could afford to produce them, so capitalism came along to get thousands of small players buying stocks and shares, which created vertically integrated, centralized, top-down systems that were enmeshed in intellectual property. These systems had economies of scale to return the investment because fossil fuels were so expensive to get out of the ground. And this all led to national markets and nation states. So basically, prior to capitalism, monarchies couldn't really advance their economy because they didn't actually have enough money to do so. The royal families were just a family with a certain amount of wealth that was actually fairly limited. However, with a national market, you could get thousands and thousands of smaller players to come in to invest in these centralized energy systems such as coal, for example, and oil at a later date. And this led to globalization. And globalization led to economic mediaries like the IMF, the OECD, the World Bank, and the UN. These centralized institutions led to 500 global companies which made up the Fortune 500. And these combined 500 companies acquired 1/3 of the total global GDP. This did lead to massive inequality, and that leads us to today, where just a handful of people own 50% of the world's wealth. So we can see historically how money and who owns the money and how it was invested into energy and into our infrastructure developed our economy. And we kind of can see where the economic model is going to go by looking at the trends of our emerging new infrastructure. This is because the third industrial revolution is engineered differently to much of the prior two industrial revolutions. The prior two industrial revolutions were centralized. They were top-down, vertically scaled, hierarchical companies where they needed a lot of investment through selling stocks and shares, and then they would have a centralized power station, a centralized transport system, and a centralized communication system in order to manage the economic activity. However, with the third industrial revolution, it's going to look very different because of the way that the infrastructure is going to be laid out. It's actually going to be better, Jeremy Rifkin says, to engage with very high-tech small and medium enterprises which are blockchained cooperatives, because the revenue will stay within the cooperative, making it more agile. So instead of the money gets funneled to the top, which you have in a centralized, top-down, hierarchical, vertically scaled company that you'd get in the 20th century and prior, with the new model, we're looking at cooperatives because they can actually pool an even greater amount of money together, and that money stays within the cooperative. It doesn't get siphoned off to investors that are living in different countries and are then hoarding that wealth in, for example, offshore tax havens. So this makes the cooperative much more agile because it keeps the money within itself. And also you can scale these infrastructures and these technologies laterally. Instead of having a centralized power station, the power is going to be absorbed from every building. So everyone that owns their own building will be able to absorb energy, and in doing so you have a distributed, laterally scaled system rather than a centralized model where just a few people earn the profits. So laterally scaled renewable energies by retrofitting your existing buildings, which are then connected together through these cooperatives. That is what Jeremy Rifkin says will be the future. We are moving towards a distributed, laterally scaled, open, digital revolution. It's going to be glocalization, which means that everything will be connected globally as part of this neural network, as we've discussed in previous videos. But each area will produce and distribute goods and services locally, so they're globally connected but locally productive. So it's glocalization. The fixed costs of actually integrating these technologies into your buildings to make them smart and to retrofit them to be energy efficient, and to put in renewable energies and car charging stations and these types of technologies, they're actually going to be relatively cheap to retrofit these buildings because the costs are coming down as these technologies are scaled. But what's really important is the marginal costs are actually heading to zero. For example, once you've put renewable energies on your building, you're getting energy from the environment. There's no utilities bill to pay. There's no gas bill. There's no electricity bill. You're not paying a centralized utilities company for this energy. You're getting it from your environment that your building is already in. It's getting the energy from wind and from solar. So the fixed costs, which is to actually buy these technologies and integrate them into your building, it's actually going to be fairly cheap. But the marginal costs, which means the monthly or the yearly costs, there isn't anything, because the sun and the wind, they're not going to send you a bill every month or every year. It's free. So these technologies will actually make things cheaper, so this system will actually be cheaper than the old model. The old model is very clunky, centralized, top-down, hierarchical, vertically scaled. It's more expensive because it's dependent on an older infrastructure with older technologies. But these technologies and this infrastructure is sunsetting. It's no longer going to be relevant. In addition to that, you can blockchain and laterally scale and therefore bypass these Fortune 500 companies, as we've mentioned previously. They may be making billions and billions of dollars and pounds in today's market, but in theory, they're not actually the future. They're the old model, and they would need to radically change in order to maintain relevance in the future. We can also bypass this old notion of nation states, which is a fiction. The nation state is a fictional way of integrating people and seeing each other as a connected family. But this new model of laterally scaling, distributing technologies and energy and communications will mean that we'll all be connected as a single family, a single globe, a single planet, one world where we're all connected and we see each other as family. So we can bypass the nation state and engage with each other region to region. We can produce and share our excess energy, tools, technologies and resources. So this infrastructure that I'm talking about needs an economic model that is compatible with it. Market capitalism can no longer make a profit because marginal costs, as I've said, are going to zero. There won't be any utilities bills in the future, for example. So because these technologies will come in, and because people will own these technologies, there'll be hardly any marginal costs. So these old centralized utilities companies, for example, they won't be getting a monthly paycheck coming in. So they won't be getting as much profit as previously. And as companies can produce technologies that are more efficient, those companies can then lower their prices in order to be more competitive in the marketplace. But as they do that, other companies will have to follow suit. So these companies will have to actually reduce their prices over time. And one example of that is by bundling more things together as a package. And so you're getting more and more with less and less, to the point where these companies will just have to start giving things away free. And that's called zero marginal cost. If you want an example of a technology where you can get more and more and more with less and less and less, look at your smartphones. You can do almost anything with a smartphone. There's millions of apps now to do almost anything. And yet you can get all of these apps on just one single slab of metal and plastic and minerals. Just one single slab, you could do millions of different things. So you could do more and more with less and less. And you're not paying for call fees anymore or text fees anymore. They package and bundle these things together because it's becoming ever cheaper to be able to offer these technologies and these tools. So that's an example where they're bundling all these apps, all these tools and technologies together at a very little price. I mean, the cost of a smartphone now is very cheap and very powerful, as well as being able to do so much. And in addition, the monthly fee for data is coming down as well as the data actually increasing month on month in addition to that. So as companies have to keep lowering their prices to keep attracting consumers, they'll get to the point where they'll have to start giving it away in order to maintain competitiveness. And this is because we are in an extreme technological revolution, which is creating extreme aggregate efficiency compared to the old model. Markets are transactional. A buyer and a seller exchange the good or service for money, and there are marketing costs, logistics costs, warehouse costs, wages. It's very slow and clunky for a digital world. But now that the marginal costs are very low, we need to shift the economic model from markets to networks, from transactions to flows, from buyers and sellers to providers and users, from GDP to quality of life, from being productive to being regenerative, from market externalities to circularity. It's a completely different model. Some providers can keep a low marginal cost for the time being. Others will provide for free as part of the sharing economy. And you can think about Wikipedia, you can think about sharing music and YouTube videos, you can think about sharing news and blogs, sharing education courses and MOOCs. These are all information goods, but soon we'll be moving towards sharing energy and transport too.
The third industrial revolution.